Maybe I should be talking with my microphone open. Apologies for that. Thank you, Marlon. And thank you all for joining and being our trading buddies for this Thursday, the 27th of October, shortly into November. And then, of course, you know what happens after that? Christmas. My goodness gracious. How does that happen? Well, it just does. Time rolls on. Not much we can do about it either, I've got to say. All right, let's not dilly-dally. Let's get into today's edition and see what's on offer for us in terms of trading. I will show you first up the pound versus the US dollar and see if we can get a trade out of this. I think there's been a lot of non-events this week in this one. Hello, Paul P. A lot of no entries, which is a shame because there's been quite a good movement on Tuesday and Wednesday. But in the wrong direction, basically. And I think from memory, we were bang on our entry on, was it Monday and Tuesday and Wednesday? Not sure. Anyway, I don't think there's been a trade successfully launched on this week. Maybe there was, and maybe there's a breaker. I can't quite remember. I don't think I've got any money in the bank because of it. I don't think I've lost any money because of it. So. Righto, so with the current candle having about 2 minutes left, we've got a range that is bounded by 11587 to the downside and 11646 to the upside. That makes it reasonably easy to find a midway point unless this candle gets a little bit lower. So at the moment, we've got, 59 pips, which is 29.5 from 87. Which will be 16.5, 116, 16.5. Right about there. So that'll be the entry point. We'll be going long. If that happens to be the case, I'd love to see a daily pivot test before that happens. We shall see. We'll just hang on to this for a tick. Got a couple of things to update. I think you guys on Monday, I think I was warning you about silver. When I say warning, inviting you to watch it because it looked like it was going to be a buy. That's turned out to be the case, but there's a little bit of a twist in the tail to it as far as I'm concerned, because as I went to bed last night, I moved my stop to entry and my stop got hit, which means I'm out of that trade at the moment. But I have got an alternate entry, which I'll show you in just a tick. When we're done with this one, just over a minute to go, and it looks like we're holding this range, in which case the entry will be at 116, 165. All right, I can actually put that in there now, I think. Why isn't that coming up? That's weird. Let me get rid of that. I can't. Ooh. Looks like I might have a frozen screen. No. But the EA is not functioning. That's weird. And I can't get rid of it. All right, now we're going to go a little bit lower anyway. To where? 85. This will become now. 85 at the moment, which means that we've now got 61, so 30.5, which will be 16, 15.5. Right, that's official now. 1.16155 is the entry. Now I'm going to have to place this manually unless I can get rid of this. It doesn't want to be got rid of. Okay. New order. I don't know the lot size. That's the only problem. Let's go with 0.02. and will be a pending order. Be at 116,115. And the stop loss will be at 1.1585. 1.1585. And the take profit level will be 2.5 times that. What was that again? The risk was, got the entry wrong, 1615. So 1615 back to 1485 is 30, just say 30 pips, so 75 pips. 75 pips from there is going to be, from there is going to be 11690. That's going to be the target. Okay. Done. Stop loss is there. Entry is there. Take profit 1, I'll have to take manually, will be at 1.1646, where I'll move my stop to entry only, do nothing else. Righto, I'll have to sort out this EA and what's going on here, why I can't control it, but that's not your concern. Let me move on. Righto, what's news? 2 things. EuroCAD that we're trading on the weekly chart. You recall 3 weeks now. We've been waiting for this to get into the profit area, which is finally done. What I did do last night was take profit again, because I was going to bed. Shouldn't have really worried about it being a weekly trade, but I don't like to go to bed when I'm floating. And this one didn't reach TP1, obviously. I took profit, I think it's 7 pips, and moved my stops to wherever that is, can't remember now. So it's not free trading, but it's not far from it. 1.3465. I think I've now got my stop loss. So yeah, look, it gets worse with EuroCAD. As I said, I went to bed, and I don't like to go to bed when I'm floating in a little bit of profit. Better than going to bed floating in a lot of drawdown, that's for sure. But what happened was I decided to be a little bit conservative, given that we had CAD news coming up, right? Interest rates at that. So I didn't want to be exposed to that without getting some sort of safety, and therefore, as I said, I took half off at +7 with virtually nothing and moved my stop loss to where it is now. That was the so-so news. The bad news was I did exactly the same thing with silver. As you know, on Monday I was kind of indicating that silver was going to be a good opportunity this week to trade long, and it presented this bar here. Not my favorite, I've got to say, but couldn't be denied. It was coming across both pivots and indeed the daily pivot, so it was a clear rejection of this level. It was also a higher low, and going on my opinion, it was also coming off the bottom of the range going to the top. So there was no choice but to take the entry. Did that. TP1 was here, probably a little bit greedy in that respect. Probably could have used the pivots, and WR1 would have been just the key. So same thing applied when I went to bed. I saw this bar at WR1 and thought, daily pivot test is going to be on here. So what I did is when I moved my stops to entry, which are pretty much now exactly where the entry for the new trade is. The new trade, I'll give you in just a tick, but that was my entry, and it's now my stop loss for a new entry, which is here. Now that entry is based on a 4-hour chart and exactly the same bar as I traded on the daily. We have had a little bit of a pullback, rejection of the daily pivot. Seems to be working well off the daily pivot. Came off it here, came off it here, came off it here yesterday, and why not go again? So I do like the fact that we're pulling back here. That's not a bad thing. It's a good thing, because if this does go short right down to here, it's not going to upset the sequence too much, and I should be able to get a better price, which is kind of back where I wanted to be in the first place. Anyway, long story short, I'm out of that trade that I initially took, trading this bar, and it looks like it's back to entry now anyway, so not the end of the world, I would think. Again, my system doesn't allow me not to take profit when I'm going to bed, and I've just missed TP1, so that I've done all that. Anyway, there's no bad news. Apart from that, it's pretty much all GO. Very, very interesting today, and for the rest of the week, I think, is the dollar index, and we spoke about this at length on Monday. This level here is key, and I think you need to respect that level, which is about 109.25 or thereabouts. I think we may get a reasonable bounce off that, maybe back to here. If we don't get it today, if we do get it today, and I get a lower high in this vicinity somewhere, I'll be willing to enter that short, and therefore go back to the things like silver, like the pound, like the euro, maybe even US dollar CAD short. We'll see with that one, but that's what I'm really watching this closely. Don't want to get into a trade that deems no profit before that level, and the same applies with silver. I'll have to be taking profit before we hit that level, which of course will be the upside down version. But that's kind of where I'm at. I think this is potentially a start to a bit of a crash on the US dollar. I don't know that we're at the crash of the US dollar. In fact, I'm pretty sure we're not just yet. But if we can get through this level here, I think we're going to see a fair bit of downside. Could put in a massive head and shoulders here, which would lead potentially, if you have a look at this scenario, this could lead potentially to what I'm suggesting, and many others are suggesting, will be a dollar crash at some stage. So it wouldn't surprise me if we get down to here, back up to here, put in that right shoulder, and then in 2025, or whenever it's going to be, we could be down here somewhere. So that's kind of what I've got in my head at the moment. Happy to trade anything against it long until we get to that level. But once we do, I think pretty much have to wait for that retracement, which will give you a lower high, give you the big head and shoulders. It'll give you, the double tops, the triple tops, everything you really need from a technical point of view. The only thing that needs to happen after all of that, of course, is the break. And that's upon which I will wait. So there you go, mate. That's pretty much where I'm at. How are you doing?
Oh, mate, do you know what? I'm doing really well, and I can't tell you much. I appreciate your analysis. I probably don't always express it actually, but it was you that really kind of drew me to silver as well. On when was it? I took the trade. I can't remember. It was a few days ago. Monday, yeah, Monday. I also got into a trade on silver and closed it in a similar place to you as well, because my problem was, and I'll show you my charts, but your analysis is just so. I mean, I'm not going to say on the money, because that would suggest that we're both right, but I'm going to say that it certainly spoke to me, and it suggested that I should get into some trades as well, and they really worked out, well, and I'm really pleased that I was kicking myself last night a little bit, because my thing with silver was that my problem with silver is this head and shoulders. That's what was concerning me. But I also got in. Now I got a slightly better entry. I didn't get the top of that bar. I got in somewhere around here, and I think it was, if we kind of look at, no, it was before this big drop, and the big drop was really concerning for me. I think it might have been this bar here. It was it was this bar here. So I entered on that bar there, and I ended up closing it at 47, so somewhere around there. So it was this high. Yeah, that's when I closed it. and I had to sit through this, and you know, the only reason that I did sit through that was because of this trend line that I'd drawn, and the monthly pivot was there as well. You know, I was very close to closing the trade down when it came through that point, but because the next bar started to move up, I was fortunate enough to kind of to hold nerve for a little while and stay with the trade, and I took profit there as well. And then as I took profit, and I started to see the price
all the while going, bloody Jeff talked me into this.
No, I was really pleased with it. Well, when it was coming down, when it was coming down, all my thinking was I could have got a better price on the long side. I thought it was going to go. I have the same feeling as you, that to me the dollar was a short, and it appeared to me that there was a chance that we could get a boost. So I wasn't too worried about this. All I was going to do is if I had to close that down, then I was looking for another price level below, and I sort of like looked at that trend line down there. So I would have re-entered, but then probably only to that particular point there, because that would have been resistance then. But the support level held. The head and shoulders was concerning me. You know, this was concerning me, which is why I thought, you know what, let's come out here. And then as yesterday started to go on, it looked like this was holding. And when the pivot appeared, it looked like it was holding. But this is what's happened this morning. It has come down. Even though and I think it's, you know, potentially going to come and test this trend line at least. But even though the price, good morning, Lewis, even though the price wouldn't be quite as good, I'm with you. I think that the entry could well be above the bars, and I'll talk about that in a moment, why I think the entry could be above the bars, and I may well take a slingshot entry, which would be very unusual for me. And we'll see what happens there. With the other and with the dollar, in fact, let's talk about why I think the entry might be above the bar. The dollar, you know, couldn't agree more. You know, I think the dollar has got a chance. My area is slightly lower. I wonder whether we might actually get down, forgetting that level. I wonder whether there might actually be a chance that we get down here, because what this would create, and it could be a little bit higher, but this zone to me looks of interest. I think we're basically on the same page, and it's just really a question of where it goes. But this zone to me is of interest on the US dollar, and I wonder whether there might well be a weekly pattern rather than a daily pattern. I wonder whether we might just come down to this level and then start to pop to the upside, which would then create a potential for a head and shoulders pattern up here instead, and that's what I'm going to look out for. So that would give us this probably that little level there, that little level there, and something in the area here. Now this is only 1, 2, 3, 4 weeks, which is quite good, because if it comes down here over the next few weeks, let's say it manages to take a whole month to hit this level down here, that would coincide beautifully with the start of the new year, which is oftentimes when people make new decisions. You know, I think the market has been incredibly badly beaten up, you know, throughout this whole year. We are in a particularly bullish period for stocks and the like. So we're in a bullish period for risk assets. But we're not really in a bearish period right now for the dollar. You know, the dollar also tends to have some pretty good strength through this period. So I just wonder whether we might be looking at early next year, maybe later this year, we could genuinely look at a short in the dollar, and then start going long on silver and everything else. Now, the reason that I wonder whether there might be a breakout opportunity here, and a possibility for this to be more of a trade that you would go above the high, is because of this, and I think that the fundamentals this week have just been so supportive of a weaker dollar to this point that we just need one more part of the jigsaw, and until we get that part of the jigsaw, I don't know whether we're going to go anywhere. And this is what we've had so far this week. So the first thing that, you know, really if we consider what's been going on so far, we've had on Friday last week, we had Fed officials suggesting that we could be close to the slowdown of policy. So that's the first thing. The market got a big boost on Friday, set its intention into play. Then, as the week kind of progressed, let's see what we've had. As the week progressed, we've had certain things. Oh yeah, we had this flash manufacturing PMI. That was the first sort of data point, if you like, that started to suggest that we might well get the pivot. And the reason that this data point is important is it's the purchasing managers index. So it tells us what kind of strength that they are, what strength they've experienced over the course of the last month, and price comes into that. So this dropping below 50, the 50 line, and flash PMI. So we got services and manufacturing both below the 50 line. Manufacturing dropping below that 50 line, and this was at 52 previously. And you can see that right the way up until this point, it's been above that line. This is the first time that we've seen it under that level. Now that suggests that price pressures have eased in that particular area. So easing in manufacturing, we can see that it's eased in servicing as well. So that was another positive number for the potential move to the downside in the dollar. Then really interesting level here. The Bank of Canada raised interest rates by only 50 basis points. Now, the expectation was by 0.75%, so only 75 basis points, but they raised it by 50 basis points. Now we've had the RBA, now we've got the BOC, both really surprising the market with a more dovish rate hike. Do the Fed follow? Now, that's been a big question. So last week, so remember, it goes back to Friday. Friday, they suggested it could be, next year sometime. The RBA did it, looked like a bit of an outlier. Then the BOC did it. looks like now we might be starting to see a trend. We see some weaker manufacturing numbers suggesting that price pressures are easing, and then we get the potential for the Fed to do the same thing. Now, the final piece of this jigsaw is coming tomorrow. Now, the ECB won't affect, in my opinion, it won't affect what goes on with the expectation with the dollar. And the reason for that is that the ECB's current level is at 1.25, where for them to raise 75 basis points, they're only going to get to 2%. But the RBA and the BOC were already up at the 3 to 4% level, and so is the Fed. The Fed are also up at the 3.5% level. So for them to raise 75 basis points would be a bigger stretch than the ECB kind of trying to get closer to them. So the ECB probably will raise 75 basis points.
Do you think that happening? And I agree with you. It's only a catch-up thing, and only by 0.25% at the end of the day. But does it give you the insight that the ECB are now willing to go match everybody else? And therefore, I don't think they will. You don't, right? Okay.
No, I don't. I don't think they will, and I don't think they can. I think what we'll more likely see is the rate of change will become similar between the two areas. So I think the ECB get to 2%, and then the rate of change probably starts to become quite similar, where the FOMC will raise by 50, and the committee in America will raise by 50. BOC might raise by 50, maybe even 25, and I think the ECB will probably stay with them from here on in. But I don't think they're going to catch up to the 4% level and the 5% level. I don't think they can. They haven't got the strength in the economy that that America have got, that Australia have got, and that Canada have got. When you consider now, Australia's trade balance has shrunk a bit, but it's still positive by like 8 billion. So their numbers are already quite healthy. The ECB are in a completely different area when it comes to that, because not only are their trade balances negative, but also they've got the problem with the Ukrainian war on their doorstep. And you know, this is the interesting thing about all this stuff is that there's this kind of push me pull you thing going on, because I was reading the RBA statement last night. And and really interesting that not a statement, sorry, a press release. I can't remember who it was that talked, but there was a talk from oh, it's not listed here. But there was a talk from a member of the Reserve Bank of Australia, and they pointed out, you know, quite sort of succinctly, that one of the reasons that Australia saw such a huge boom back in the kind of mid noughties was because of the mining boom that went on. And you know, it was really interesting that you know that certain sectors actually did really badly, but obviously the mining sector did so well. Trade balances were so high that the RBA had the room to raise interest rates and stay on pat. So it really boosted the Australian dollar. And when you consider that kind of dynamic, it really kind of like illustrates the room that these central banks have when the economy is doing well. The ECB don't really have that. They don't really have that luxury because the economy isn't doing well. The Fed have had that luxury, you know, that the American economy has held up pretty well. Unemployment has held up pretty well. But if you start to read the earnings data, which earnings hasn't been awful, but what's really interesting about earnings is the forward guidance, if you like, from some of these companies. And they're basically saying, you know what, we're cutting jobs. The strong dollar is really harming our exports in places like China, because we're just not competitive. So, you know, the likes of Microsoft have been hammered because of it, and Tesla and all these companies are basically saying, look, there's problems coming because the US dollar is way too high. Now, that's going to start, you know, filtering back into officials, and we've got the midterms coming up. Biden and the like do not want a higher dollar going into the midterms. You know, they want to see some relief going into the midterms. So there's another reason that the dollar probably will. I wouldn't be surprised if the next FOMC isn't 75 basis points. It might well be 50, and not because they think that they should only go 50, but because they might have pressure from the government to not go 75 basis points. And that's what people are banking on. But the numbers need to really help them out. So when you look at these numbers, you've got new home sales from the United States coming in. You got sorry, that was yesterday. Today, unemployment claims, big number. You know, if that unemployment claims starts to pop to the upside, then we might start to see some further weakness in the US dollar. But the big ticket item this week is the PCE. Where is that? Here we go. Core PCE price index from the United States. If that comes in now, that's projected to come in at 0.5%, a 0.5% rise from 0.6. If that does come in at 0.5%, or it's even less, then I think we see the dollar come down, and I think we could see it come down significantly by the end of this week. And as I say, I think because the Fed just need some help to start easing back. And when you sort of start to stack the bricks up and say the RBA have reduced, the BOC have reduced, we're starting to see PMI suggest that there could be some weakness in the economy now in the United States. Microsoft have come out and said that they're cutting jobs. Does the unemployment claims figure help that out? Could do, and if it does, that's going to be interesting. Does PCE finally help it out? And if it does, I think the expectation will then be the Fed may not go 75 basis points before the midterms. So I think that when you start to put the jigsaw together, as long as all the pieces fit in the correct gaps, then I think we could see the dollar start to come down sooner rather than later. And that brings us back to now, all of these things are incredibly speculative, of course, but that brings us right back to suggesting that if the PCE number is a bit of a headline mover, then that brings us back to the likes of silver being a trade just before PCE above a level, because do we see a really good bounce and a really good bounce through? Possibly. If that number comes in at 0.3, 0.4, anywhere in that region, the dollar's going to weaken like that. But you don't want to probably be caught in that trade. I wouldn't have thought, I shouldn't say that actually. Some people will be quite happy to hold the trade if you got the correct money management. But I wonder whether that might be a better approach going into the PCE number. Because if it does come in weak and we get triggered in, I think it could actually go a lot further. And I still think that there could be another, I don't know, possibly 1 or 2% drop in the dollar before we find some footing. And 1 or 2% in the dollar could actually filter through to a 4 or 5% rise in silver. So yeah, I think there's interesting things at play. I think that there's some ways that we can play it, and I just wonder whether your approach might well be a really valid one going into Friday.
Well, it looks okay to me technically. I just want to go back to what you're talking about, the dollar, and everything you say is on point, of course. But there's one thing that irritates me, and that is the debt that they're carrying, and that they're forcing the world basically to raise interest rates. But if the interest rates continue to go up at even 0.5%, what does that mean to their debt level? Their debt level is currently, what, 30 trillion or something like that?
Yeah.
So their interest bill is in the trillions now.
Yes.
Per annum.
Yeah. Yes.
That's got to be fun.
Well, no, absolutely, mate. And this is why what the Fed need to make sure that they do is watch people's personal debt levels. Because really, sort of like the great thing about inflation at these particular levels is that they can inflate the debt away. That's the wonderful aspect of it. If you've borrowed when interest rates were low, like many people would have done, let's say you locked in a mortgage before these interest rates started to go higher. So you've locked in your mortgage, inflation starts to go up. Sorry, inflation is it goes up exponentially. So your wage level goes up, everything kind of goes up. But your debt level
it does that, and that's been the issue. Wages have not gone up.
No, wages haven't gone up, and some of the problem with wages. Well, I mean, wages have gone up, but they just haven't gone up at the same pace.
That's right. Yeah.
But if they can, but let's say you do manage to kind of like square that circle, and that's, as I say, this is where inflation really works for people. So if you've borrowed at the level before they raised interest rates at 0.5%, let's say, and on a mortgage, and your wages start to go up, then all of a sudden you can start giving a little bit more of your wage towards that original debt because of inflation. So that's what inflating the debt away can do for people. But of course, as you quite rightly say, that's not the case for a lot of people, and also wages haven't gone up in the same way. But what the United States, what the Federal Reserve needed to be checking is what is the personal debt that's carried? Because if personal debt is growing, that means people are borrowing at this rate, and they're not locked in to a previous rate. And but again, the home sales market is really important here. Because if home sales start to dip, that suggests people aren't borrowing as well, and also that could possibly be pointing to the fact that they've either choked, they've choked things enough, or people are quite happy to stay where they are. So there's a lot of dynamics that need to be kind of taken into account, as you rightly point out. But if you start to see those personal debt levels, and this is where fundamentals become really interesting, because when you open up one door and say, okay, well let's just go inflation, CPI. When the CPI is going high, the likelihood is the Federal Reserve will raise interest rates, or whoever else, the central bank will raise interest rates, and that boosts the price of the currency. Well, that's fine, but that might not be the case if the unemployment level is too high. So the unemployment level has to play a part. Now, in this situation, the unemployment level is very low. So that does suggest that the United States are that the Fed can move towards higher interest rates. But then you start getting earnings reports coming out saying, well, we're cutting jobs because the higher dollar is harming our exports. Now that's eventually going to filter into things like PMIs. So then we start to kind of have to consider whether the higher inflation matters. Does it matter as much as it initially did? Well, probably doesn't, because at some point the level will top out. Not the CPIs necessarily, but the room that the Federal Reserve and the central bank will have to raise interest rates will have to top out. So because their mandate is about full employment and price stability, so that starts to become a factor. And if you've got high unemployment, then that's going to suggest that people aren't buying houses as well. So all these numbers start to kind of fit together in this myriad, really, that you've got to kind of pick through. But then you've got personal debt levels as well that you have to kind of put into the mix, and you're always looking for a clue of what the central bank is going to do next, which is what leads us back to making the assumption that the ECB haven't got the room to raise interest rates to 4% like the other big guns have. And the other big guns, the likes of the RBA, the BOC, probably the RBA's, RB's NZ and the Fed have probably got the room to raise interest rates to 5%. I don't think they could go higher than that. I think they're already at critical level now, mate. And I remember talking to you about, I don't know, 6 to 8 months ago and saying anything over 3.5% is dangerous. And we are in that zone. We are in the danger zone. And you're already seeing the likes of Microsoft coming out and saying, this is really hurting. This is starting to hurt. Unilever today, one of the behemoths of the UK, which is boosting the FTSE. The FTSE is having a great day today. But Unilever today talking about raising prices, hiking prices way above where they were before because of inflation. That's going to produce more inflation. So even the companies start to give you a hint of what's going on at the macro level. You have to almost look at the micro to see what's going to filter into the macro level. And the micro level is not looking pretty for inflationary numbers, which is why when we look at charts like silver, or FTSE's looking really good today, but you look at the Nasdaq's starting to weaken somewhat, and that's because of the way that the earnings picture has come out. And is the Nasdaq likely to get a boost up to, I don't know, well, look where it is. This is where this is the ideal spot. Really, I think what people are anticipating here is the potential for the Nasdaq to possibly pull back to somewhere around the same level here. So maybe sort of like create something like that, and then it can start to go. But is that really going to happen? I wonder whether we see one more significant low before we're really out of the woods here. Which is why I think that you can put levels, maybe place orders above levels. So then if you're wrong, you're taken into the trade and you can ride the train. But if you try and speculate on what's going to happen at these particular levels, you could be in lots and lots of trouble, because I just don't think we're out the woods yet. I mean, there is a chance, when you look at sort of position charts like this, there is a chance that people could start buying up, and maybe we do start to boost up to around here. But there are going to be levels on the Nasdaq which are just not going to be attractive. But I still wonder whether we're even going to get there. I wonder whether we might actually see one more big move to the downside, just to see the COVID high before the COVID, before people really start coming into this market. I wonder whether this just looks like another pullback.
That chart's telling you at this very moment that it's a short covering rally to resistance.
Yes.
So it's in a sell zone right now.
It's in a sell zone, yeah. And again, tomorrow's PCE number becomes interesting, because if the unemployment numbers aren't weak today and tomorrow's PCE isn't weak, you've got to short the Nasdaq. If the PCE is weak and the unemployment number is weak, you've got to go long silver, in my opinion. And that's the way I'm looking at this market right now. You've almost got to have two options. You've got to have a short and you've got to have a long. and mine would be short Nasdaq, long silver. That's what it's leading me to right now.
I love that chart. That looks fantastic.
Well, if you're going to trade it, mate, I might follow you, considering you managed to make me some money on silver. This is where we are on the Nasdaq. Double top. I don't know. Would you regard that as a double top, mate?
I sure would.
Yeah. So you got double top here. Certainly suggesting that that it's going to come down somewhat. Probably
to get that lower high though.
You need a lower high.
Mm-hmm.
So you need it through this level first.
No, I need it up. I need it through the daily pivot first.
Through the daily pivot, right?
When I say a lower high and a higher low going the other way, what I need to see is a rally. I've got to sell a rally. And there's no rally there right now. You've just got consolidation.
Yeah.
So I mean, it's the classic of all classics when you're at a reversal point. Yes, you can call that a lower high that you've got now, and it may work out. But if it hasn't come off the back of a rally, it's no good to me. It's just going to be a range break at that point. Yeah. If you get a rally and sell the rally on a lower high, you've got a far better chance of getting a good result out of it.
Yeah, I really like that, mate. I really like that. You almost look for sort of a short-term blow off top.
Absolutely, yeah.
Yeah.
You bet.
Yeah, that's interesting.
And it's the same.
Well, it may well
every single range is built in that fashion. You know, we also, humans are all got different body shapes and all the rest of it. Charts don't. You go back and have a look at most times that a reversal has taken place. You'll find either a lower high that triggered it, or a break and a retest of the neckline that triggered it. Any one of those in combination, or they're not mutually exclusive. You can have either one of those, and if you're prepared to wait for it, it's a very, very strong way to trade reversals. You don't have to guess; it's there, but you've got to wait for the rally if you're looking for a lower high, and you've got to wait for the break and retest if you're looking for the neckline break. But they're the two favorite things of my entire trading career because they're so reliable.
You've got to wait for the break and the retest, and then you're trading under the retest
of the neckline. Yes. Yeah.
Yeah. So you'd be after something like this. Why is that not changing? I can't get my oh, here we go. So you are after nice big. Does it matter what this bar looks like? Nice strong one?
No, it doesn't matter at all.
So you're really looking for.
You'll find that the very best of those is going to be one of those big bars, followed by an indecisive bar. That is a reversal bar. Right. So if you get that, then you can go early on it, I reckon, or you can wait for the next bar, which will give you what's known in the Actions to Wealth fraternity as a ringed high. Right. Right. So when you see those in context, they're absolutely superb. But you have a look at the silver chart on the daily chart. So you've got your bottom. Yeah. Just pick any bottom there, it doesn't matter. Even the extreme bottom. Yeah. You got a rally, then you got a pullback. Sorry, off the extreme low, mate. The one in the middle of the chart. Oh, here. Yep. You got a bullish engulfing bar. Yeah. You got a rally, then you got your pullback, which gave you the lower high, the higher low. Yeah. Oh, here. Yeah. That's when it's pretty cool to trade. So you're looking above this bar then? Yes.
Oh, that would have been a beauty.
Would have been a corker. Now you've got another rally and another pullback that's giving you another higher low.
Yes.
So you trade that again.
So you'd be looking at this bar, wouldn't you?
No, you'd be trading probably the red
bar after the pull. This one, yeah, I got it. I see what you mean.
And now we're looking for another pullback, probably back to the pivot there, which would still give you another higher low.
So with this one here, this here, and then you see that, wouldn't you be looking at this bar in this area?
No.
Or because you said
because you haven't had this, you haven't had the sell.
What about this?
No, that's not a sell. This is a sell.
So this is, I think this is where it becomes a bit muddied. The waters become a bit muddied for me.
No, not at all. It's not a sell because it's a feeble response it's probably a profit take at the end of the day.
Yeah.
Right. It's not a sell-off. The two bars on the other side of that range, that's the sell-off.
Why is this? Yeah. Why is that not just a feeble take profit thing?
It is.
So you couldn't trade this bar?
That's the bar I traded.
I know, but why? So why is this not feeble, and this is feeble?
They're both feeble.
So what? So then, why would you trade this bar and not this bar?
Because it's a break and a retest of a trend line.
Ah, gotcha.
The other one isn't. It's broken a level.
I'm with you. Yeah. Okay. Get it.
There's a little nuanced thing in there, but
there is.
Look, it really is 100%. But that's why this one's not going 100 miles an hour either, because it hasn't had a sell-off.
Yeah, it's too feeble.
It's too feeble. Absolutely.
That's really, it's fascinating, mate. Absolutely fascinating. FTSE 100 is getting a rally today. We've got 3.4% on Shell to the upside today. And it is really sort of like the world beater right now. They've come out and said, I can't remember what the profit headline was, but they had crazy profits, which they're going to pay in dividend, which is very clever, because obviously it means that if the price continues to go higher, then it would suggest that they're going to be paying their shareholders, which people are going to like. And I have to say, after reading that, I just thought, Rishi Sunak. We haven't talked about Rishi Sunak, mate. Obviously, got coronated on Monday, so he's now in charge of the country, and already kind of come out and done a few bits and pieces here and there. But I'm still surprised why.
Can he save the pound?
Probably, mate. Yeah, I think he probably could. I mean, when it comes down to it, I think Rishi Sunak is probably the right man. I think, and it's been a while since I've been able to say that. I think he's the right person, let's say. Right person for the times that we're in. But he does need a lot of luck and a fair wind if he's really going to succeed. I think it's going to be tough. And it's going to be tough for obviously, the reasons that we already know that are laid bare. That with the problems with the world and the planet we got. I mean, climate change is really starting to step forward again. We've obviously got the escalation of the problem in Russia. We've got the problems in China and Taiwan. We've got COVID still sticking around. We've got inflation raging. So he's got a lot of things that need to help him out. But he does need luck. So he needs luck. He needs some real, a huge slice of luck. And I think that luck could come in the form of of some kind of supply issue kind of coming back online. Because if that was to happen, then it's possible that we do see inflation abating. I don't think the central banks are going to have. Well, I think they'll have little effect. But in saying that, what we are seeing is, because the dollar is so high, and because the likes of Microsoft are starting to get concerned about the higher price of the dollar and the fact they're not exporting. It does suggest that the labor market in the United States will weaken, and that will also push prices down. So even though the dollar is strong, actually it could fix the inflation issue globally, because 25% of GDP, global GDP, really is the United States. So with a strong dollar and the probability that we are going to start to see some weakness in exports, then it could actually drive prices lower. So some demand could come out of the market.
Wow.
So
I heard today here in Australia, and this is the local news, valid or not, you can take it maybe with a grain of salt, but the headline on power is electricity, that next year there'll be a 50% increase in the price of electricity.
Right.
50%.
Yeah.
Holy dooly. There's going to be businesses going to the wall on that.
Yes, absolutely right. Which is why I think we might get one more low in this market before we really get out the woods. I think
is that sort of talk going on in your place as well?
Yeah, it is, mate. I mean, I think that talk's been going on for quite some time over here. And the reason for that is that our proximity to Russia and Ukraine is obviously a lot closer than Australia. So there's already that talk, and actually they're already starting to hike, which is why we're starting to see the likes of Shell continue to push to the upside. I mean, 4% move in a company that size in we haven't even done the first hour yet. And we're already 4% higher on Shell. Now I know we've had an earnings report and everything else, so it does help things out. But it does beg the question, why the government aren't going after them for some sort of windfall tax. And obviously that wouldn't please the shareholders. And I'm a big advocate of free markets, but I think you could ask them for something. I mean, geez, they've benefited a lot from the situation, and it's difficult because obviously you don't want to scare companies off from investing in these shores because you are punishing them when they do well. It's not really about that, but we're at extreme time. So asking them to contribute something, even if it's some sort of give us, let us have it now, and we'll figure out how we can sort of maybe give it back to you later on. I don't know, but there could be something done. I don't know. Yeah. It just seems a little bit too easy to go. Look, leave them be, let them make all their money. We're all shivering back here, and we're in pain, and cost of energy is going up crazy amounts, and there are certain people that continue to do very well, and that doesn't really sit that well with me.
Wait, fasten your seatbelt, mate, because we're now going into that part of the cycle where, and you mentioned it before, house prices are going to come down because of mortgage stress.
Yeah.
As interest rates increase. And, there'll be bargain hunters that have got lots of cash because they've ridden the stock market for 14 years.
Yeah.
And they don't know where to put their money anymore. But hang on, everything's coming off.
Yeah.
Stock market's coming off. House prices are coming off. So they're going to be able to afford, those with big, long pockets are going to snap up all the bargains.
Yeah.
So the cycle just continues to repeat, as it does. I mean, cycles are cycles. They do that. So we're going to see, again, a massive shift between... We spoke about this before, didn't we? I think there'll only be two levels. There'll be the rich and there'll be the poor.
Yeah. Right?
There won't be a middle class anymore.
Yeah.
Because of these cycles, it's only those who can afford to buy the bargains who will buy the bargains.
Yeah.
And then they'll go back to rental crisis and rent prices go up and all the rest of it.
Yeah.
How many times did you have to see it to understand it, really, at the end of the day?
Yeah.
So
well,
fasten
I mean,
seatbelts. That gap's not going to get any narrower, I can assure you.
Yeah, I mean, certainly for us, it does sort of also, create some opportunities, because I guess that's the
100%.
thing, isn't it? Is that if you do see the housing market as volatile, that means there's opportunity. And when you look at opportunity, then you're sort of like starting to pick areas where there could actually be some profits. I mean, the Shell's case in point, Shell and BP have had an astonishing year. And if you were able to not only see but hold the position in Shell and BP because of the oil scenario, then you'd been doing really, really well this year off the back of it. And we're talking about a market which was laid bare as it was going to be. I mean, it hasn't been any volatility; it's just been going up. But you could certainly sort of like say, well, that particular sector is likely to do well in this particular scenario, and that's really what's happened. You see oil go up, and that happens. So if the house price scenario is going to affect people's buying power, already you've got a straight short. You can short Barratt Homes, you could short Taylor Wimpey. There are opportunities in housing where you can put in a short position in some of these companies. Now, what would you go long in? Well, the banks are going to do pretty well here. They've already sort of like started to see the benefits of inflation and the benefits of them putting up interest rates. So, okay, you can't really sort of make too much money out of housing, but you could probably make some pretty good money out of banking. So you could probably go and say, I'll have a long on banking and I'll go short on housing. That's just off the top of my head, So it's really sort of like looking at what the macro picture is and where there could be an opportunity, because, I guess that the thing that we are exposed to on a day-to-day, week-to-week, month-to-month and year-to-year basis is the gap between pain and pleasure of people's scenarios. And ultimately it's our job to put that aside. It's our job to put that aside, on a moral and emotional kind of aspect. You can't put that aside, but the job is to put that aside and think, okay, well, where's the opportunity? If this is going to happen, where's the opportunity? So we've also got to get our heads into that space.
Yeah, look, you can actually help in that regard. And, if there's a moral dilemma, that's very, very easily fixed. If it was the case of, and I think we spoke about this when war broke out, suppose you're making money on the back of war, right? What would you do to, I was going to say ease your conscience, but it's not a matter of that. It's a matter of, okay, if I can do well out of that war because the price of ammunition went up, or whatever I've traded is just gone through the roof, gas, oil, blah 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 blah. Then if I've made money out of that, surely I can put a humane contribution to the people of Ukraine to start with. So it's not all downside if you're prepared to share that, right?
Yes.
So
yes.
Our job is
totally
not
agree.
to have that moral compass.
Yes.
Right? That's not our job, but I think you can still have that moral compass and do well with that.
Which I suppose is what my point was with the likes of Shell and BP. They've done pretty well out of this, and to be fair, they've done well because there is a conflict. That's why they've done better. So they're not going to give it out their own pockets, and actually, they'd have to put it to the shareholders anyway. And some of the shareholders wouldn't be too keen on it, and some of those shareholders will be, people that are claiming their pension that probably couldn't afford it. They've probably got that little holding in BP somewhere. I know people that all they've done is bought oil stocks for the last 20 years. They don't know anything about the stock market, but they believe that's the place to be. So so it's not quite as kind of clean cut as taking their money, because actually, as I say, there are people that have been very sensible with their money, and they've invested in their pensions every year and done all they can to try and come into retirement with some cash, and they've got a BP and Shell holding, and they could get punished as well if governments come out and say, there's going to be a windfall tax on you. So it's a very complex situation, really. But what you really hope is for those that have, and hope that those that have managed to gain out of this, just give a little bit back and say.
You would hope so. Absolutely.
We don't need
I mean,
it.
and you know, there are philanthropists all over the world that we don't hear about.
Yeah.
And you know, you don't really need to mention names, but a lot of these people who have made mega bucks and billions, they do it every single day of their lives. You know, they contribute to this, that, and the other thing, and I think that's exactly what you need to do. You know, if you're a Christian, right, and I'm not, they've got their own way to do that. It's called tithing, and I think, you know, the financial world should have a similar scenario where if you're making $1 billion, why can't you just contribute?
Yeah,
I don't know, $1 million, right? What's wrong with that? There's nothing wrong with that.
Yeah.
And
Agreed,
yes, some will do it to avoid tax as well, but you know, that's another story entirely.
Yeah. Anyway, mate, we're near the top of the hour. I think we've covered loads, and I haven't really got anything to wrap up. I think I've sort of probably exhausted everybody with the things that I'm looking at. The long and the short of it, if I was wrapping up, it is looking for a short in Nasdaq and long in silver, and maybe waiting for those numbers. One thing, actually, a couple of things I wanted to just finally touch on. On Monday, we talked about the Kiwi Swiss coming out, churning out the probably as the trade of the week.
Yep, and I didn't want to know about it.
You didn't want to know about it?
No, that's what I said. I didn't like the chart. I couldn't find a way to trade it.
No, difficult one. To be fair to you, mate. The opportunity looks like it was here, and that isn't easy, because this is the start of the week. These white bars here are the weekly bars. Start of the week's here. In a lot of ways, it becomes really simple, because if you were to look at this chart and say, well, I'm going to be a trend trader, I'm going to wait for a higher low. This was where the week opened up. So after you've kind of seen that, then it would suggest that that there's no higher high, higher low there. So it's trending down until you eventually kind of hit that spot. Then there's the higher high, and there's the higher low. So it looks like it was this area here, which was a tradable opportunity. And we're only on Thursday. I mean, there might well be more. But that was the tradable opportunity, and the reason I'd say that's the high is because of that area there. So it needed to take out that area. So after it's kind of come back, you may not be that keen on that, but there's another opportunity here as well. So the way that this was approached was the fundamental data, the seasonal data, and the COT data all suggested that the Kiwi was a decent long, and it suggested a few others were a short. You know, that it suggested the CAD was a short, and it suggested that the dollar was a long. But because of the news and the data that was coming out for the week, the easiest and safest currency pair ended up being the Kiwi Swiss. So that's why the Kiwi Swiss actually came out pretty well. The CAD as well. So that leads us to the Kiwi CAD. The CAD as well was also a long opportunity. I wouldn't have wanted to trade it before that announcement. Now we've had the announcement, that would suggest that the Kiwi CAD has got. I don't know if I want to trade it into any higher, actually. Not a lot of room there now, mate, to be honest. I think you're waiting for a pullback, and as long as the Kiwi still remains strong, then you're looking for upside on Kiwi CAD. And also that would also lead us to the dollar CAD as well. Dollar CAD is actually not too bad at all. You know, you'll probably be looking for a dollar CAD long right now, because even though it's going to end up the week down, well, it might not actually, but it looks like that there's been a decent move down. Looking at the same kind of philosophy that we were looking at with that Kiwi Swiss, it would suggest we need a higher low. So a higher low starts to provide itself. Maybe that there's going to be an inverted head and shoulders coming in somewhere around here. That bar's slightly problematic, but where it becomes a little bit cleaner is if you take that area there. So I would want to look for a break and a retest of this area, and dollar CAD somewhere in about the 136, 100 level. So that's what I will leave you with there, mate.
All right, buddy. My trade of the week was Euro Kiwi, which hasn't set up for me as yet. Let me have a look at that. I think if you were similar to yours, if you were trading it on smaller time frames, you might have done okay, which I haven't been, of course. Euro Kiwi was a sell for mine. And I was speaking earlier about how we trade, or how I trade reversals, or how I look to trade reversals. And double top, rally. It's at that point that I'm looking for a lower high. Unfortunately, if the lower high comes on that rally bar, that's a pain in the bum, because how are you going to trade that? You've got to put your risk here, and your entry here. Doesn't make sense. So you've got to look for something in here that actually does make sense. And nothing there on the daily chart, which is what I'm trading at the moment, makes sense. Go down to the 4-hour chart, then maybe there was something that bar. Maybe you're in that trade, I don't know. But I'm still waiting. Waiting for what? Well, now, one of two things. I think it's the break and retest of the neckline, or it's the false break of just a straight line, which should give me another rally and potentially another lower high. If it doesn't, then I stay out. Simple as that. But I really want to catch this because it's a classic at the moment, potential reversal. Only potential. I've got to have, like I said, got to have that rally to sell off after a lower high. Euro CAD, about, the euro is really interesting. It always is. But I'm seeing a re-entry above this channel, which also represents parity, of course. And pardon me, I think next week, if I've got a pullback to that level, I'm talking 2 weeks away before I can trade this, but that's okay. I don't mind. This could well reverse. So just like we've been speaking about on the dollar index, it's exactly the same one. If this does go to, if the dollar index does go to that support level that we're talking about and bounce off it, then exactly the reverse will happen here. So maybe we hit this resistance level and bounce off it, come back and retest this area, giving us the look of an inverted head and shoulders.
Yeah.
Right, which is the exact opposite of what naturally we've spoken about on the dollar index. Yeah. So, this area is so key to me. And I'll be looking for it very, very closely. And if I do get this pullback next week, I think I'll be prepared to trade euro dollar long. And that's
I like that, mate. Lewis is watching the dollar yen short as well, and I think Lewis, that's the thing.
You're going to drive me to drink, mate. Seriously.
That's where we are, though, isn't it? When if you're short dollar, you're starting to look at going long on things 100%. Like the yen. That you're going long on the euro, on gold, on silver. All this stuff is fair. Do you know where I think it becomes a little bit separated is with indexes. With a NASDAQ, do you really want to go long on the NASDAQ, given the issues still exist and they're still going to raise interest rates? I'm not so sure, but certainly some of these other assets look really interesting.
So this is the same thing, Lewis, in my humble opinion, right? Yes, you've got the reversal bar. It's there. So you've got a right to trade this short. But the way I look at this, if this is going to reverse, same thing applies. Hit that support level, maybe it's the monthly pivot, then it bounces back off it, rallies, comes to a resistance level, won't be the weekly pivot there, but maybe it's the weekly pivot here, maybe it's something else, I don't know, there may be a level across here, I don't know, but bounces back up to here, gives you the lower high, which backs up the reversal bar, right? And then I can trade it short if I get the correct setup in this area. But at the moment, again, all I see is a support level underneath this dollar at the moment. Yes, I can probably find a trade down to there in a smaller time frame, and I get that. That works, which means I can trade silver long at this point up to a level. I can trade gold, I can trade the euro, I can trade the Aussie, I can trade the CAD. but only for a short period of time, because I do believe as soon as we hit that level, it's going to bounce.
Yeah.
And then when it gives me the lower high, wow, I'm just going to really get into it, because I think this will be the start of something substantial. So that's where I'm at with that.
I agree, man. I think the danger is that people are going to get the fear of missing out and think that it's not going to bounce and it's just going to fall and fall and fall. And they might well be right, but I think that's one of the things that you're just going to have to accept.
Yeah, look, if it does, at some stage, someone will take some profit and it'll pull back.
Yeah.
And it'll hit the underside of this line. Well, that's going to give you another opportunity.
Yes.
So, you know, FOMO is kind of a weird thing, and I get it. But really, to say you get a second chance all the time is folly. It's not true. But you do get a second chance often.
Yeah.
But
more often than
you know,
not.
if you just follow the rules and don't try and get in too early, you shouldn't get cut up too much. And that's the whole point of the exercise.
Yeah.
There was something else. What is it? Oh, a pound. It hasn't triggered. Right. So we're looking for the pound. You've got the levels. Again, if you're here and haven't been watching this pound trade, this is still in test mode, will be probably for the next 6 months till I actually iron this out. Currently, we're still ahead on pound versus the dollar, trading it this way. Today, there's your entry at the midpoint. There's your stops to entry, and there's your target. We've been through that before. As always, let's finish with the good old euro. And the 30-minute time frame is telling me one, and you've seen that chart, right? That chart suggesting that we go long euro dollar, only for a short period of time, but it's suggesting that we go long. At the moment, if I go a little bit wider and come across to here, no daily pivot test yesterday, no daily pivot test yet today. That immediately gives me my edge. My edge being that I want the euro to test the daily pivot. Now, what I want and what the market delivers are oftentimes different things. But the classic here for me is going to be, actually, we may even have it now. We had a break and retest of here. Where's your risk, though? That's the problem. Trading into the low of the day, but if it's a new low, that's okay. So your risk now has to be there, 18 pips to get you about 13. It's not ideal, but it is probably tradable. I'll wait. I'm going to wait until I get a false break of the resistance trade line before I trade that. But that will be my focus until I go to bed. And if it doesn't happen, then it doesn't happen. But there's the good old euro, setting up again for a daily pivot test. If you can find a way in and a safe way in, happy days. I think you'll probably get a result out of that at some stage today. We shall see. That's about me. Still holding Euro CAD. Silver hasn't triggered. I was going to tell you why I was trading that. And the reason is pretty much, actually, it's more of a, and I should close the order because it's more of a revenge trade than anything. But there is a setup there. There is a daily pivot test. But like I said before, when you look to trade a higher low, you need to have a sell-off. And I haven't got that. Maybe I'm getting it. Maybe that's exactly what I need. So I'm actually going to cancel that order.
I think it's wise. I like that.
And wait for it to come down to here and see what happens. If I get a rejection off the weekly pivot, maybe we'll set another order. But I've got to really consider what I've said. And what I've said is absolutely the way I trade. So if I haven't got the sell-off, then I haven't got the trade. And it's obviously much better to trade off support than it is to trade at resistance. So there you go. Silver orders cancelled.
Thank you, buddy.
We're done.
All right. Well, as always, thanks so much for being my trading buddy and to bring me into looking at silver, because it's been a decent week. Actually, incidentally, the FTSE trade we took on Monday was also a winner. I don't know, depending on sort of how people traded it, but obviously the FTSE's well up right now, and if you've managed to hold through the downside, then you'd be doing pretty well. So we've had a decent week, I think, this week of picking stuff out. And obviously, thanks to everybody in the room for joining us. You are welcome, Lewis. Thank you to you as well, mate, for your interaction. It is really appreciated. And of course, thanks to Marlon for looking after us. We'll be back Monday to do it again. And I think it's daylight saving this week, mate. You might know better than me.
Yeah, I'll have to stay up. Yes, it's your daylight saving. You're
daylight
going
saving
off. You're switching it off, which means I've got another hour to wait to see your smiling face. But that's okay.
You got another hour to wait, and I'm guessing everybody else does too. So Marlon, just take note of that next week we are starting the show an hour later, I believe, because of daylight saving.
That's correct. Is that correct? 6:55. Hang on.
Or is it an hour early?
2:55, right? 7th November, Gary's telling us. Is that right?
Oh, is that right? Is that okay, mate? Yeah, you're probably more informed than I am about.
Hang on, we better Google that and get it right. We better Google that and get it right.
Yes, 3:55. Yeah.
So, UK DST 2022. It's saying the 30th October. Gary. I'm getting. Has anybody else got the 30th October? That's what I've got.
It's March. Where do the clocks go back? October. Here we go. I think it is this week.
That's
30th. Yeah. 30th October.
Yeah. Okay.
One day before Halloween. So,
yes,
on Monday, we're an hour late. So 3:55.
Yep.
7:50. Yeah. I mean, look at the times in the UK. You know, it's 7:55 UK, and I think our clocks change. So if you look at that, you'd be in pretty good shape.
Yes, I dare say you're right, Gary. It probably is US. That's the only thing that's left. We've gone. Kiwis are gone. Now the UK's, the Pommies are going. It'll be the dollar next on the 7th. You're right, I'd say. All right, let's get out of here. Have a wonderful weekend, everyone. What time in Australia? It will be 18:55. So 6:55 p.m. That's what time we'll start. What are you coming? Are you coming down under, Lewis? Come to Tassie, buddy. The best place on the planet. Awesome. No, next year. All right. Mate, have a great weekend. And we'll catch up on Monday at the new time. Everyone else, thank you for being our trading buddies. We'll see you next week. Bye-bye.